So everyone keeps saying that if we just build more homes, then prices will finally fall. But what if the entire system is wired such that every solution only makes matters worse? Well, right now, every single lever, from planning reform to migration, construction costs, even interest rates, they're all moving in the wrong direction at the same time. And when you line them all up, the data is screaming one thing: the crisis hasn't peaked. It's only just begun. And if you think the shortage looks bad now, well, just wait until you see the numbers for 2026. In this video, I'll unpack the 5 forces driving this crisis and the real-world data that explains why prices are far more likely to rise again before they fall. Firstly, I'll cover a construction pipeline collapse that nobody's pricing in. Secondly, I'll touch on the builders who can't build, even if demand explodes. Thirdly, I'm going to touch on a hidden demographic shift that's supercharging demand. Fourth, I'll touch on the government policies that are backfiring in real time. And lastly, I'll cover what all of this means for house prices heading into 2026. And that last one, it's going to flip every single bank forecast on its head. And the number that proves it, well, that's buried inside Australia's building pipeline. And you're going to want to stay until the very end because the conclusion ties everything together into a price trajectory no economist has modeled before. Guys, my name's Josh. I'm from Data Edge Property and I help everyday Australians navigate the Australian property market using data. Data that's accessible to absolutely everyone. And if you get value out of today's video, make sure you hit that like button and subscribe so you can continue to see data-driven insights just like this. And with that said, let's jump into the pipeline collapse that translates into a future supply shortage that's already locked in. So think of housing supply like a conveyor belt. You've got approvals on one end, and then you've got completions rolling off the other end 2 years later. Well, that conveyor belt is essentially empty. According to the ABS, total dwelling approvals are down about 35 to 40% from 2021 levels. And that's the lowest since the global financial crisis in 2009. Even if approvals doubled tomorrow, completions wouldn't lift meaningfully until late 2026. And that's the scary part. Even if we fix the problem today, the shortage is already baked in for 2 years. And if we talk about the government target of building 1.2 million homes over the next decade, well, the reality is that in the last year, we only had around 160,000 completions against a target of 240,000 per year. And that's according to the most recent ABS data. And that's a missing city the size of Adelaide every single 5 years. And every month that passes, that gap only compounds. And by the time that politicians actually notice or care, well, it's too late to meaningfully change or reverse course. But even if approvals suddenly exploded tomorrow, there's actually another reason why supply still wouldn't recover. And it's even worse. So in 2024 alone, over 3,000 builders went under according to most recent ASIC records. Now, since COVID, a lot of builders have had to deal with fixed price contracts with 30 to 35% cost input price increases, which have completely wiped out profit margins for most in the industry. And if you think that means cheaper prices ahead, well, it's actually the opposite. Less competition means higher costs. And now banks are demanding stronger pre-sales, more equity from builders, and even higher contingencies when they're assessing loans for construction companies. As for smaller developers, well, they're completely frozen out. And you see, it's a feedback loop where you've got fewer builders, less supply, higher prices, and then even fewer builders. And the only way to restart this whole machine is if house prices rise enough to restore those margins in the first place. So ironically, to actually solve the housing crisis, prices have to actually get worse first. And that pain isn't just about costs. It's about something that no one is yet tracking in the data. But before we jump into the demand side, if you want to see how this dynamic is playing out on the ground, make sure you check out my video where I compared Perth against Melbourne heading into 2026. You see, one market's running red hot whilst the other's quietly gearing up for a comeback. And if you're interested in seeing which market is best positioned heading into 2026, you can check it out above or in the link down in the description box down below. Now let's touch on a hidden metric that absolutely everyone's ignoring. So everyone talks about migration, but the real story is how we actually live inside our own homes. Since COVID, the average household size has fallen from 2.6 to just under 2.5 according to the RBA modeling. And while that might seem like a tiny shift, in reality, it actually adds between 60 to 70,000 extra homes per year, and that's even if population growth stops today. So it's not even more people, it's more bedrooms per person. And that's why the maths is no longer adding up. Students are back, remote workers are spread out, and older Australians are downsizing faster. Remember, we're not short on people, we're short on housing. And you layer on top of that a vacancy rate nationally of just 1.2%, and in places like Brisbane and Adelaide, it's less than 1%, combined with rental growth increases of 4% nationally, with some capital cities seeing rents rise as much as 7%, such as in Darwin. And you layer on top of that listings, which are at record lows nationally. Well, all of these factors in the middle of a supply drought, they tell you that this isn't just about demand. This is structural. And in a moment, I'm going to explain to you why every single government policy that's been implemented to fix this issue actually makes it significantly worse. But before we jump into policy fails, if you actually want to analyze the property markets the way that I do, not just the headlines, grab my completely free property due diligence checklist in the description box down below. It shows you exactly how to spot red flags, zoning, rental demand, and a bunch of other factors so that you don't get trapped by the noise. And if you're still watching, you're part of the 10% that actually cares about the data. But my analytics tells me that 9 out of 10 of you are not actually subscribed. So if that's you, make sure you fix that by subscribing and joining the data-driven minority who stays ahead of the herd. And with that said, let's discuss government policy whiplash, because that's the cure that kills the patient. The Housing Australia Fund, well, the money might be allocated, but the first homes won't be finished until 2026. And that means that the 2024 solution that we got from the government only shows up after the next election in 2027, at best, and only after the shortage only worsens. Well, what about shared equity and deposit schemes? Well, they only boost demand, they don't address supply. How about rent caps and land tax tweaks? Well, they only drive investors out of the market, which would only place upward pressure on rents and only worsen the affordability crisis. So everything that I'm seeing right now from governments, both nationally but at a state level as well, is policy whack-a-mole. Every fix just creates 2 new holes. And even planning reform is getting stuck in city councils that have way too much red tape and are just not operated efficiently. And even when projects finally do get approved, well, valuers mark them below cost, which means no funding, which ultimately means no housing. And you see, that's the paradox. The more that governments help, well, the less that gets built. So here's the question that I keep coming back to. We know supply's broken, but what's the real bottleneck? Policy, planning, or pure market forces? Make sure you drop your thoughts down below. I read every single comment and use them to shape future deep dives. Because at the end of the day, the truth might actually be all 3. And what that means for prices next will actually shock you. So based on everything that I'm currently seeing with the supply situation in Australia, my short-term estimate for growth across the rest of 2025 and heading into 2026 is that growth holds firm at between 4 to 6%. And that's underpinned by record low listings, chronic undersupply, and the only thing that's really slowing things down at the moment is affordability caps and how fast prices can actually rise. But the floor, it's rock solid. Across the more medium term in 2026 and heading into 2027, as rates ease and construction levels stay anemic, well, demand is likely to rebound even further into an empty shelf. You see, this is the same setup that we saw between 2011 and 2014, except this time costs are higher, stock is tighter, and capital is still flowing in. And that combination, it doesn't slow markets, it only accelerates them. And when that happens, we'll see the same pattern play out again, only this time it'll be magnified. So guys, with all of that said, housing crises, well, they don't end because politicians say that they will. They end because builders outbuild demand, and we're nowhere near that right now. Until that happens, expect more noise, pain, and another round of price growth, which everyone out there is going to call a surprise. And if you've made it this far, thanks so much for watching. You're part of the data-driven 1% who actually understands before they act. Ultimately, the question now isn't if prices rise, it's who is positioned best before that happens. Guys, I really hope you got value out of this video. I really appreciate you staying right until the very end. If you enjoyed it, make sure you hit the like button, subscribe so you can see more content just like this, and I'll see you in the next one.